So thank you for coming. So today we will cover two topics. Setting up the conditional order, which is a short topic, and then I'll show you about 40 charts of my April trade. So I prepared the chart for every trade, and I go over for myself what I did. So it's like before and after scenario. So before and after, you should have that for you to see what happened from the time you took the trade to the time you close the trade. So I prepare every chart. So I'm showing you the April trades. April trade itself, like 40, 45 winners. In March, also the same winners, but so I cannot show you about 80, 90, 100 charts. So I'll show you only 40 for April. And then when the May ends, then I'll show you another 40, 50, whatever the charts are. All right. So let's begin with the conditional order first. It's a small topic, and then I'll show you all the charts. Oh no, not this one. Just a second. Let me show you this one first. Okay, so what is conditional order? So the objective of conditional order are two: to eliminate greed and to enforce discipline. So to eliminate greed and to enforce discipline. So what happened, how the greed comes in? Did you start? I have no sound. Are you not seeing this? Do you have a sound coming in or no? Can you hear audio? Are you guys not seeing, hearing me or what? Okay, yeah, so if you cannot hear me, then it means a problem on your side. Thank you. Okay, so problem on your side, not on my side. Thank you. So the conditional order is to eliminate greed and to enforce discipline. So way back when I was trading, I see the target, and then when the stock is hitting the target, I just sit there, watch for more gains, and then I miss it. It pulls back. Sometimes if I'm calculating based on the option price formula, I calculate wrongly, and then when I put the order, it hits a miss. So there were a lot of issues in that way. So the conditional order eliminate greed and enforce discipline. So now what? So I give you the example. Let's say this is the way the people set the order. So let's say they are bullish on XYZ, and the current price of the stock is $150. And the target is 155. So you did the technical analysis. You said, okay, my target is 155, and the current price is 150. I'm going to buy the July 150 call. So you bought the 150 call. You paid $3. Now comes the good part, and this good part should be done beforehand. So a lot of traders, they do the good part of calculating their profit after they buy, and then they say, okay, where I'm going to sell. So let's say they say, okay, I'm going to sell at, let's say, 40% profit target. So that's what their target is, 40%. So they calculate 40% of $3 is like dollar what? $1.20. So $1.20, 40%, and then they add to their cost $3 plus $1.20, and they set the sell order at $4.20. And sometime it hit 420, sometime it doesn't hit. It goes to 410 and then it reverses. So that's one way of setting up the target. Now, another is based on the technical analysis, you said, okay, the target is 155. So when it's 155, what you do? You wait for 155 target to hit, and then you sell the stock, sell the option. So whatever is the price of the option when the hit. Another way is you say, okay, I will let me calculate, put my option, pull out the option formula, Black-Scholes or whatever the delta. So let's say the delta is 50, and you bought the option at 3. So you say, okay, $1.50 or $2, whatever, based on your delta or whatever formula you have for option calculation, and you determine $5. So you set the $5, and then what happened? Maybe it doesn't reach 5. Maybe the target didn't hit 155, or maybe it hit 155 and you just sat there, and then the stock comes down to 154.50, then 154 and 153, and then goes back to 150 and 145, etc. So to eliminate all this, and the main thing is when the stock is hitting the target, that's where the greed comes in, because the stock accelerates. So magically, we see it accelerating towards the target, and that's why we change the target. And when we change the target, sometimes we miss it, sometimes it blows through, or even if it blows through, when the pullback is occurring, we don't push the sell button. So that's where the greed comes in. There's no discipline. So to eliminate all that, there is something called conditional order. In some platform, there's something called activation rule. So find out what the broker calls on your platform and set it up, the order, and I'll tell you how. So first, when I was trading in the interactive broker, so that's where I was having this problem. So I called them like 10 years ago. So I called them and I said, I'm having problem. Is there a way I can set this up? So it's also called contingent order or condition, whatever is the name, the logic. So you understand the logic. All right. So they explained to me, yes, they have the feature. And then when I moved to TradeStation, the same thing. So I look at it, and it's called activation rule. So activation rule says this. So I'll explain what it does. Okay, here are the flaws I already explained. So flaws in the other previous three methods is that profit objective of 40% may not hit. So this is yeah, I reached the maximum attendees, so I cannot have more people. So webinar is full, sorry. So, okay, so the profit objective of 40% may not hit. So this is where people make mistake, the traders make mistake. They come up with their own objective of 40%, 50%. They say, oh, I'm going to make 40%, 50%. 40% maybe, and then they forget that how many days it took for on average it takes for them to hit 40% profit. So they don't have this idea, they don't track this. Now sometimes 40% is hit in 2 days, yeah, fine, because this, when the stock moves, the 40-50% move is, in option is normal. But if the stock is stuck for 10 days, 15 days, then the target may hit, but the 40% target profit is not there. So maybe only 20% or 25%. So traders make a mistake, and they are very rigid. They're not flexible. They are very rigid in their profit target. So there's a problem there. Now, the calculation of option price based on target price may not be accurate. So there's another problem. People put in the, I used to do that in my early days when I started. I didn't know how to set this conditional order. So I used to put okay, I created an Excel worksheet and I said delta. Okay, this is the star option price. So multiply by delta. This is what it is. So I put the sell order, and then as the stock is moving, the delta is also moving. So if I bought the delta 50, the stock is moving and the delta is moving to 60, 70, and then I missed the big profit. Or I did not calculate the option price accurately, and then I just miss out. So all this nonsense was going on. Then another thing, the biggest problem is this: selling option when stock reaches target. So when the stock or any instrument like futures or anything is hitting, it's very easy to for the greed to set in, because we always want to maximize the gain, and we just say, okay, let me change the target. Let me move the target a little bit more up, and that's where we miss the profit altogether. So the discipline is very important. So so the conditional order, what we need in trading is completely removing the greed, completely having the discipline, of taking the profit at the time when the profit is coming, and we should know about the average. So in trading, another thing, people go for exceptional profit. That's where they also make wrong decision. Exceptional profit. In the trading, you need to go for average profit. So what's the average? So average needs to be tracked instead of exceptional. When you try to be exceptional, this is where time passes and the return just doesn't come. So enforce discipline and free up time to trade other stuff. So if I have 10 position open and if I don't set the sell order, how I'm going to take care of the profit. This position is slipping away, that one is slipping away. I'm looking at this stock, I'm looking at the future, I'm looking at the market. So many things going on. So all the sell order needs to be set in advance to do some other stuff. So what's the benefit of conditional order? So the conditional order benefit is removes greed, enforces discipline. You can even take your dog out for a walk. So I received email, oh, gee, I didn't set the sell order. Now I see it moving again because I was walking the dog, or I was driving, or I was making coffee and all this thing. So you can walk your dog if you set your sell order based on conditional price. So conditional order puts money in our account automatically. So it puts the money in account in automatically, and then you don't have to worry. You have your sound open, and then you say sell order hit, and done. So conditional order is set and forget strategy. So I give you the example how conditional order works for calls, and then I'll show you how conditional order works for puts. And I'm explaining for calls and puts, and you can do for lot of, you can do anything with the conditional order. It doesn't matter what you're trading. You can put conditional order for anything. So the way it works is sell my XY. So this is what you're telling the system. Sell my XYZ call contract at market price when XYZ stock price is equal to or greater than 155. So let's say you remember the example, 150 is the current price, and then the target is 155, and you bought the July 150 option. So you have three ways. Some they calculate 40% target. Okay, I bought at 3, I'll sell at 420. Or when the stock hits at 155, then I will sell, or I'll calculate my option. So those are the ways. So remember, 155 is the target. So you're telling the system that whatever is the option price, I'll sell. My option should be sold whenever is the stock hits the 155 target, because you are trading. You bought the option because you saw something in the stock, right? So you started with the stock, so and you're trading option. So the option doesn't care about your stock, whatever would be the price, it will sell at that price. So, but you know that the stock 155 is the price, and I need to sell at 155. So the syntax is called syntax in programming, or you can look at it in TradeStation activation rule or interactive broker conditional order. So they have a syntax, and if you follow the syntax, you will see things moving in your direction. So sell my XYZ call contract at market price when XYZ stock price is equal to or greater than 155. So this is important, equal to or greater than 155. Okay. So I've created a little chart to explain. So when you're setting up the conditional order, you're saying order is set at market, not a limit. So this is another thing we need to remember, to sell at market when the stock hits the target. And for calls, the syntax is greater than or equal to. So for calls, you need to set greater than or equal to. For puts, you need to set equal to, less than or equal to. So if you buy a put, suppose the stock is trading at 150, for put you're believing the stock will go down. So the go down target is 145. So you're saying sell my put when the stock hits 145 or low. All right. And when you're setting the conditional order, you test it with one contract because you may be setting it wrongly, and then you will see your order get filled and you don't like it. So it's not good. So you test it, make sure you test it in one contract, maybe you test it in your simulation account. And when you see it's working, then you implement in your live trading. So remember, equal to, greater than or equal to for call, and less than or equal to for puts, and market, not at limit, because you want to sell your option at the market price at that time, not at the limit. So the limit may not reach. Okay. So next is the scenario for the puts. So let's say you're bearish on XYZ, current price is 150, target is 145, you bought July 150 put, and you paid $3. So what will happen? How you will set the conditional order. So sell my XYZ put contract at market price when XYZ stock price is equal to or less than 145. So when the stock reaches 145, or suppose it gaps down to 140, or you wake up and it gap down. So at that time, whatever is the option price at the market, it will get hit. There is a problem also about the market. So whatever is the market price, so you have to remember that. Another thing you can do is, let's say you say, okay, S&P target is 3100. So I want to liquidate all my long position when S&P hits 3100. I don't care what profit I have. So it doesn't matter if the stock, if it's a stock or option. So you say, okay, close all my long position when S&P hit 3100. So as soon as the S&P hits 3100, all those the sell order will trigger, and you can automatically close all your position, because sometimes it's important that you need to exit when a major target in the indices hit. So let's say the major target is 3100, and you say, okay, I don't want to be on the long side when S&P is hitting 3100. So you set the order, sell all my open positions at market when S&P hits 3100. So you don't have to close the position one by one. So it removes the greed, because sometimes when we are closing the position one by one, we say, okay, let's sell this, keep this, let's keep this for a while, and all that is mumble jumble. And then what happens? Sometimes you make money, more money, sometimes you make less money. So if the major target, is 3100, and the chances are that the market is overbought, or it will just stop there. So you exit as a basket. So you bought and you exited. You can also set the buy order. So let's say you say, okay, if S&P hits 2500, these are my stocks. Buy me 100 shares of each when S&P hits 2500. So as soon as when S&P comes down to 2500, all your buy order will trigger. So just you have to make sure that you're not catching a falling knife. All right. So this is about contingent order or conditional order or activation rule. Now let me open the other presentation and show you where is it. Yeah, this one. Okay, so I'll show you about 40 charts. Let me see if I have something else before. Okay, so here's the Apple chart. So in this set of presentation, there are about 40 charts. So 40 charts, about 80 slides. So one chart for entry and one chart for exit. And the way I trade, there are certain chart patterns. I just keep repeating and repeating. So I found that I'm trying to explain to you, but it's not easy to implement, show you all the strategies here and explain in detail. So it's just a glimpse. And regarding how do I hedge my portfolio, this crazy market starts to go down again. So you have to learn the hedging strategy first, and then create your portfolio. So please learn the hedging strategy, then the market. If you think the market is crazy, first of all, then you shouldn't be in the market. So that's the first thing. And learn futures trading also, so you can hedge when the market is going crazy overnight. Maybe you can short some futures. So please learn hedging strategy. So here's the Apple chart. So we trade, if you will, I have about 450 stocks in my basket. So I divide it into two. So 250 stock in one basket and about 200 stock in another basket. So most of the time I'm trading 250 stocks. So I open that basket and I find my candidate, and I just keep looking at what I want. I keep finding what I need to find, and there's always something there out of 250. I don't even hardly open any the other basket of 200 stocks. So I've already filtered 450 stocks based on the criteria, and I just focus on that. So focus only on the 250, and then if I don't find anything, maybe sometimes the stocks are overbought, or in the bullish market. So I cannot find, and I need to find something else. Um, I open the other basket. So you will see most of the stocks, they are well known in this presentation. So first is the Apple. So Apple, first of all, the buy signal came here at the hammer. So it came when the market was like really crazy going down. I did not buy Apple here. And then when it jumped above the 200-day moving average. So this was another buy signal for me. And then I waited for the opportunity. Now, when you're looking at the chart, it's on 13th of April. So this chart was created on 13th of April. So that's where I bought. So what was happening on 13th of April? So we have to go back and look at it. What was the market condition? What was the NASDAQ doing? What kind of news was coming? So all together you put it, and then you say, okay, I'm going to buy calls in Apple. So what happened here? This red bar means there was a reversal. So reversal came from around 272, something like that. So when 272 was conquered, that's where I entered. Because if the stock reversed from certain price and then it's conquering that price, what are the chances? What it's telling me? It's telling me that the market wants to move up because it conquered the price where it reversed. So 273 was the price where we bought the option. And then what happened? So here it is. And then next day it gapped up. So to around 281. So when it gapped up, although it went up higher, but I sold at that time 281 at around 281 target. So the gain was also, it depends how much gain we have, what positions we have. So the gain was immediately next day $200 per contract. So we locked the gain. Here is the chart of ABBV. It's a drug company. So again, you'll see the same phenomena, the 200-day moving average crossing, and then looks like if you look at the chart, if it's a common sense, so there's a caveman kind of trading. So if I'm looking at this chart and the drug companies are moving up, now let's say Gilead is moving and others are moving, and the coronavirus positive news are coming. So I start flipping the charts into drugs. So I have a list of all the drug companies, the well-known, and I see, okay, the news is good on the Gilead, and that one has moved up. So what else is available? So that's the logic, common sense logic. So what is available? Okay, ABBV looks good. It looks like it's bullish move because the open is same as low and open is same, and it's just continuously moving. So what are the chances of ABBV to go down and then to go up? So buy calls, and look what happened. After 2 days, it just gapped up to a 50-day moving average. So if 2-day move came and we are making 35.71 gain is good enough, 36%. So my history tells me that on average, I make 50% gain. So on 2-day move, if I get 36%, that's good enough. So 50% gain, if suppose 50% gain comes after 5 days and 36% gain comes after 2 days, I go for 36% gain, then to wait for the 50% gain, and then see that 36% gain goes to 0. So it's better. Let me see what questions I have. Hi, Ayush. So I don't know what you're asking. Thank you. Please don't ask all these questions here. So ABVV, he is asking all kinds of questions. Okay, Ayush, please. So ABV exit 36%. Next is this AIG. So now AIG is, so why did I trade AIG? AIG, so look at all the other financials. The financials were tanking. And so, and then after coronavirus, they started moving up. So here, this 3 big move. So this is a bullish move. After this hammer, these 3 big days of up move. So I missed that move. So now what I'm waiting patiently, and I'm saying, okay, let AIG come down. So when AIG came down, fill the gap, came down, fill the gap, and then when it gapped up again. So if the stock comes down and fill the gap, and then start bouncing up, it tells me that it has found the support. The support is right there. Fill the gap, and then gap up. So this is the second buy signal. So we went long right here based on this logic, and see what happened. 71% gain right there after 2 days, just based on common sense logic. There's more to it. Looks like it's a common sense. There's a lot more to it. So I teach in coaching, but I'm showing you caveman trading. Now look at the AMBA chart. So next one is AMBA, again on 13th of April. So if you look at the AMBA chart, it's like yo-yo, right? Is up and down, congestion and whatnot. But this tiny candle, Harami candle, this tiny candle at support at 48. What are the chances of AMBA to go down below 48 and to go up? Went long, boom, went up next day. All we needed was one move up, and it gave 24% gain next day. So 24% next day gain is good enough. Here's another one, chart AMD. So now look at this one, AMD. What the candle is telling us is it's a super bullish candle, counter reversal. So what are the chances of AMBA to go down, or AMD to go down, then to go up? 50-day moving average is right there. The gap is getting filled, and this super bullish candle. So what are the chances of AMD to go down or to go up? So if you have to bet your dollar, where would you bet? So the bet is to the upside. So I bought the calls on AMD, send the alert, and we sold. So you will see, okay, 16% gain. So again, 16% gain, but you have to look on what happened, what was happening that day. So the futures market were, I think, up in overnight session, and then when the market opened, the futures were coming down sharply. So when the market was coming down sharply right at the open, it's better to take 16% gain and worry about later. So shoot first, ask question later, or whatever it is. So we took 16% gain because the market was coming down. So that was the reason. Otherwise, we would have stayed long, and AMD just went like right here at 57. Here's the APA. So look at the APA. First of all, it tanked from 32, 35 targets. I think it was more, 42 somewhere. So APA, look at the oil stocks. They were just going down crazy. Remember the crude oil thing? So then it found bottom like around 3 or 4. So again, I was looking at all the oil stocks. So oil stocks are in my basket. So one of them is APA. Although I don't trade this lower price stocks, But the oil stocks were exception because they were reversing sharply upward. So it's foolish to ignore these highly beaten down stocks. So looking for the opportunity, there was some news, possibly there always a news, something coming up with the oil. When you watch the crude has found the bottom and it's reversing, or whatever was happening at that time on 7th of April. So 7th of April. So when APA gapped up, bought the calls right there, and then sold another gap. So how much gain? 70% gain. So bought the calls on the gap and then sold on another gap, because what are the chances for APA to go up then to come down? So if you look at the odd, maybe it will come down and fill the gap. Who cares? It can go to the moon. It can fill this gap. It's a big gap here. Maybe it filled already. I don't know. But 70% gain is good enough for a 2-day holding period. So we bought on 7th, sold on 9th, 70% gain. Now here's another one, Baidu. So these are all well-known stocks. So another one, Baidu. So China news, China, sometimes the bearish news, sometimes the bullish news, or whatever it is. So maybe there was the bullish news, and I spotted the Baidu. So what are the chances that Baidu has found a 95 support? So if you look at it, 95 support, clear, ping pong fashion, it's moving up and down, up and down. So what are the chances for Baidu when this is a bullish candle? The Baidu will come down, then to go down. So the odds are going up, and we sold. So after 2 days, sold for 20.45% gain. So this was good enough. Baidu, maybe this 20 point. Sometimes the percentage gain looks little, like 20%, but if you look at from the dollar point of view, maybe it's a 200 or 300 per contract profit. So, but if you look at the percentage, it's okay, 20% gain. So you mix the 20% gain. Sometimes you take 70%. Sometimes you take 60%. So on average, is let's say 50% gain in your winners and 50% loss in your loser. So as long as the win ratio is higher than the loss, you make money. So our win ratio is 89%. So 89% win ratio. So if I put 100 trades, 11 are losers, 89 are winners, and these are all the winners. They are losers. It's not like I don't have a loser. So here, look at it. Blue. So again, it's a drug company. So Gilead probably was moving up. So all the news were coming related to coronavirus. So this company has found some solution, or this company, I don't care, as long as whatever it is, blue, yellow, red, whatever is the symbol. So Bluebird, I don't know who is the CEO and what is the P ratio, or if they have a vaccination, or where they are located, how many employees. I have no idea. If you ask me, I have no idea about Bluebird. All I know is this stock move, and I am going long on this candle because it's super bullish. Open is same as low, and when I spot it, probably the high was the same as the close. So bought it at 50, and this is what happened. So you see, it filled the gap. As soon as it filled the gap, the register rang, and we made 65% gain. Okay. Now here's another one. So I'm giving you all the examples of how I spot and how I trade. So BWA. So another one. So what are the chances for BWA that it will come down or to go up? Here's the support, clear support at 24. So I spotted at 26.86. It looks like gonna conquer the moving average, and boom, you see that? So what's the gain? 44.44. So 4444. Magic happens at Trade Genie. Look at that. Here's another one. Now C. So again, the C, Goldman Sachs. So I think the C went down. So why I bought calls on C? So C tanked because the JPM earning, I think, was bad. So JPM earning was bad. The C and Goldman Sachs, they tanked along with JPM. None of their fault. They just tanked. So when they tank, so what's the common sense trading? So common sense trading in the pre-market, you're saying JPM Morgan earning is bad, and it tanked like $3, $4. So other stocks tank. So you flip your charts related to the JPM, and you say, okay, oh, C looks good. It's support. What's the problem with C? I will take my chances on C. And look what happened. Next day, it went down again. It went down below our price. You see, it went down to 40 at the support, 40 support. And it took a while, like 3, 4, 5 days. And then look at the gap. So why C went down? There was no fault of its own. And maybe there was a good news when it gapped up and gapped up to 50. We sold what we made, 40% gain. Here's another one, Caterpillar. So Caterpillar, to be honest, I missed all this super move, all this move I missed. So it came in March. So remember, the March was tanking, how the market was tanking. So, but on 23rd of March, we knew that, okay, the low is formed. And starting 24th of March, we started buying calls. So this was the late March. So we missed all this move. But then there was a news from China, something came with the Caterpillar. So I said, okay, what are the chances of Caterpillar to go down and to go up and fill this gap? So go long. This was a bullish candle, and then again bullish after this pullback. So what are the chances? Chances are that the Caterpillar will go up, have a high chance of going up. So trading is all about putting the chances in your favor, and then have a leap of faith and get in. Look at this Caterpillar. You see that? So when it made a tiny candle, so most of the time I'm taking the profit when the tiny candle is formed. I don't like tiny candle. I don't like tiny candle on the way up when I'm in the trade. I like tiny candle when I want to get in the trade. So tiny candle, I like it when I'm entering the trade. I don't like it when I'm in it and then I want to get out. So I exited. 21% gain. That was not bad. Now here is the CCL. So we know all the cruise cruise stocks and airline stock, all of them tanking. Look at this one, super crash, right? So from 52 to all the way to like $7. So it looked like as if it's going to zero. So when this move, was happening, what are the chances of when super move is happening and breaking the low here from where it bounced up? So it bounced up from here, some price level at around 1050, and then it did the counter move and crash. So when it was crashing, what are the chances of that it will not go down further? So this is what happened when we bought right here. As soon as the low was broken, we bought right here the puts, and we sold. So what are the logic is to sell because this is the low. This is from where the CCL rallied. So it can rally again because the buyers can come in and hold the position, right? So somebody bought. It's not me and you bought. Somebody bought and moved the stock all the way to the top here to 1750. So you see from $8 to 1750, it's like double, 100% gain. So they sold a 100% gain in the stock. So we got out right there when it was touching the low, previous low. So we made 28% very next day. So, and then what happened? We switch our position. So we don't care if it's a CCL, RCL, it's Carnival or what, as long as we see, okay, now it's like a, what is it? It's like a roller coaster ride. You go up, then you come down, then you go up, then you come down. So you don't care what symbol is. So now the low was formed. So we exited. Remember, we exited right here. And then I waited for one more day. And then when it gapped up, okay, buy calls. Who cares? It's going up. Our stop is right here below. If it really tanking, then we will be out. But chances are that this is the double bottom test. So we, boom, look at that one. So that one was 78% gain right here. You see that? So what's the logic? If I buy something option and the next day the stock gaps up, so I would, and I have 78% gain. I rather take 78% gain than to try to make 100% gain after 5 days and then lose this 78% gain see it going down to 40, then 30, 20, and then 0, and then negative 40, 50, 100. So I take 78% gain if I see it next day. Now here is CLR. So again, oil stock. So CLR was just very choppy. You see up and down, up and down. But it looked like this congestion zone is about to be taken out, and chances are that it's going to go up, and there is a big gap here. So if it breaks above, it's going to get fill the gap at 15. So what are the chances of CLR to go down then to go up? Here we go. See, right there, gap fill, 117% gain. So our members have doubled, quadrupled, I don't know, 500, whatever percent. Just keep receiving a testimonial that I made this much money, I made this much money. So a lot of you are members in this today's session. A lot of you are already, and a lot of you are not. So I'm just showing you what if you're not in our service, you're missing out. Now here, CRM. So CRM was choppy. And what are the chances? So again, what are the chances of CRM to go down or to go up after bouncing below 150 and then closing 150? So the round numbers play a role, like 25, 50, 100, 150, they play a role. So I spot these moves also. So 150, what are the chances of that it's dipping below 150? You see here, it closed right at 50, 150, 150. So then it bounces up. So what are the chances that CRM will go below 150 again or go up? So we bought the call, and the next day gap up right at the 200-day moving average, and we made 29% gains right there. CVS. So all these drug companies, these distributors of prescriptions, they all tanked too, right? You see from where 76 all the way to 52, so clobbered. I don't know why CVS was down, maybe because the stores are closed. So what are the when I spotted, what are the chances that CVS found the bottom at 58 and then gapped up? So why did it gap up? So what are the chances that it gapped up from 58 level, finding the support, and that it will come down, then to go up? And when the target is right here, because this is the resistance, and you see that next day, after 2 days, what happened? Went there to 50-day moving average and hit the resistance, 33.33% gain out. Another one, CVX, or another oil stock. So what are the chances of when the oil is moving and all the oil stocks are moving, and when you see this move and you say, okay, CVX found the bottom at 80 support, looks like not the bottom, it's 80 support, and this is a big move right here. So we missed this one, but then we saw again the opportunity, we got gapped up. What are the chances of CVS to come down, then to go up and fill the gap here at 95? So we sold early, 27% gain, but 27% gain next day was good enough. I don't know what happened to CVS. Maybe it filled the gap, but 27% gain. Maybe there was some other. Sometimes we sell early something when the stock's moving because we have other position open, or the crude is moving down, or it's Friday, 12 o'clock. So there are a lot of things happening behind the scene, which we don't know what was the reason for selling at 27%. Now, Delta Airlines, so again, remember all the airlines was getting clobbered. So we traded puts and we traded calls. So here is the Delta. So people don't apply the common sense logic in trading, which is really common. The people, this is where the people don't make money in trading. So when we send out free trade alert and then I receive the email, why do you think Delta will go up when all the airlines are shut down and all that? That's their thinking. And so that's the way they are thinking, that the Delta airline will just go to zero. So somehow. So they forget that it tanked from 63 level here already to 20 level, and they're expecting maybe it will go to zero. So imagine Delta airline vanishing from in thin air. Is not going to happen. So 62 is the price it tanked. So you have to always look back from where the stock has tanked. 62. So when it gapped up, what are the chances? This is the support right here, 20. So you see intraday move down, and then coming back up, move down, then coming back up. So 20 is the clear cut support. So I was watching, and then it gapped up. So this is the first signal that the airline, this is stock wants to go up. So bought at 25.49, but then I got trapped. So you see the trap choppiness. But if you look at this chart, it's not it's failing to break. Doesn't matter what news was coming related to airline, that all the bad news was getting absorbed. So when all the bad news are getting absorbed, stock wants to, there is a support, there is accumulation going on. So the big boys, they make money in this kind of chart. They don't make money in a parabolic. The retailers come in the parabolic move. The big boys are making money in this kind of move. They have billions of dollars, so they are buying all this. So all this choppiness is getting created by big boys. They are supporting it, so they are buying it. So every dip is getting bought. So all the moves are here. And then when it gapped up again here, I sold. So we were locked in for 10, 12 days. So I also track how many days has been passed, and we are still in the trade. So this is another category you need to look at. How many days has passed, and then I'm still holding. So it's like, okay, I've been holding this for 10 days, and the stock has not moved, but it's not going down. So it's not going down and it's not going up. It's just going flat. And I'm just looking for my chance to exit. So when I saw the chance, and we bought more, I sent alert to buy more. So in the trading service, I do provide alert to buy more, just in case you are not in the position. So you can add more to the position, you can accumulate more. If you can initiate new position, when the market does this choppiness, then the option is also losing value. So let's say we bought for $3, and now after 10 days gone, the stock is at the same price, but the option is now at $2. So it has lost its value. But when I see the move, the opportunity to add, so I send the alert to buy more. So we add more so into it. So the logic that never add to your losing position is not right. So we do add to our losing position and make it a winning position. So when delta gapped up from here to here, we exited in 50% gain. Dollar Tree, so Dollar Tree, Dollar General, all these dollar stock, they were just tanking. They tanked. So you need to see from where it tanked. So it tanked from 120 all the way to like $60. So like 50% haircut. All the stocks 50%. So what are the chances of Dollar Tree to, when you look at this chart, what are the chances of Dollar Tree to go up? So it bounced at 75. So if you look back on the left, you will see 75 is a clear cut support. So if you look back on the left, you see here big candle. So this is 75 is a solid support. So when I saw the gap, I said, okay, what are the chances of Dollar Tree to break the 75 and lose? We will lose. Even if it breaks 75, 70 is another support. So I would add anywhere between 75 and 70, and I will manage. So what are the chances? So we bought calls, and next day we sold at 21% gain, not bad. Here's another one, the big super bullish looking chart. So EOG, so another oil stock. So must be something going on during that day regarding oil. So oil stocks are moving. So we made a lot of money with oil stocks. So here is it. So look at this one. All these tiny candles are telling me that there's a support right here. First is the support. It bounced like from 28, 29 here. And all these tiny candles are telling you that there is a support around 34. So let's say this is a support, and you know that. And then it moved. You miss all this move. And then it tanked, gap down. So it gapped down, came down to, when you look on the left side, you see, okay, all the support. This tiny candle is telling you that there is a support. This tiny candle, all these candles, when you combine, you figure it out that this is a support level. And then why the stock gap up? There is a gap here because it closed right here and it gapped. When it gapped and took out the previous day high, it gap took out the previous day high, my buy triggered. So I look at it and I look at it and say, okay, the buy triggered. So I went long because what are the chances for the stock to go down? So apply the probability and to go up. So I bought the call, send the alert, and here it is. So when it moved up and the tiny candle formed, so we said, okay, we need to log the gain for 32%. So here's another one, EXP. So all the traveler stocks and all that, tanked because nobody's traveling. So you see EXP from 140 all the way to like 45, 46. So the big boys, they are buying here. So what will happen when these stocks will reach some level here and the market is tanking and all these stocks are getting clobbered? So who will be holding the bag? All the retail boys, all the big boys, they bought it here. They have the power. They can move the stock. So they bought it like 48, 45, and they will move it here all the way somewhere here, like 113, and then somebody they will distribute, and by the time we realize, they are already gone. So what are the chances of AXPE to move up or to move down? Here's the support, here's the support, here's the support, and then gap up. So buy the call. Look at that one. So when back to back gap occurs, we need to exit when the gap back to back. So 81% gain on a back to back move. So gap, two gaps. Now FB, this is tricky. So this is a tricky chart because there is nothing for the naked eye. Don't see anything. You say, okay, what am I looking at here? Why you went long? And so FB, this this dip below 170. This is another. This is telling us that there are buyers here. It's not. It did not break this support. So I look at it. What happened a few days before, and then what's happening now. So what happened before? It dipped below 170 and then it closed. Then again it dipped below 170 and then it closed. Then these are the tiny candles, and I may have seen some news on that day. I don't recall what happened that day, and I bought the calls and sent the alert at 177. And then, so when we bought here, it gapped down. So now it gapped down. So exit or not to exit. So look at it. 170 is the support, and then next day when it gapped up, so we took the profit of 34%. So it's good enough. Now here's the Goldman Sachs chart. So why we got in the Goldman Sachs? So look at this one. It gapped down. You see, it closed here at around 179 and it gapped to 170. So it gapped to 170 and then rocketed upward. So when the stock gaps down and rocket upward and penetrating the previous previous day candle, it's a bullish sign. So entered at 179 and gapped up, we exit right there on the gap. I mean, we worry about later what will happen next. When we see 32% gain, we take it. So all these gains, they multiply, they just add up to your portfolio. So by the time you realize, you see 100%, 200% gains. So here is IQ. I don't trade IQ as such, but it's in my portfolio. So maybe it was in the other basket of the one which I don't trade. The other 200 baskets. So I have a two basket, 250 and then 200. So IQ is on the other basket. I don't trade IQ. So here, what are the chances for IQ to go up, then to go down after bouncing from 16? So all these candles telling me there's a support. So it dips below and then they buy it. It goes up, goes down, then they buy it. So I said, okay, 1650 support, and it's taking out this high. So let's go buy calls. So we send the alert to buy calls. Now look what happened. So 1736, and then the same day after we bought, it tanked. And there was a news that they are cooking the book. I think this is a Chinese company. They are cooking books, and just like the Lucky Coffee, they were cooking books. So we never traded Lucky Coffee. So cooking books, and then it tanked. So when it tanked, we received emails. Okay, what's going on with the IQ? So and so I was watching, and I was looking at it, and I was saying, what is going on? I was also saying the same thing, and then it started to reverse. So uh, is sometimes the bad news come and then the panic sets in, and then the stock is stabilized and then goes up. So intraday hammer form. So you see this huge base hammer. So this is where I also send the alert to buy more, and we exited at 52.63% gain. So we exited after, I didn't, when the stock does this, like this kind of a hammer thing, and then goes against us and then go up. So it's better to just exit from the position. Don't care, as if this trade never happened. But we made 53% gain. Here's JWN. So all the retail, the department store, they tank. So nothing is there. Like mall near my home, it's like there's not a single car. There's just a policeman, driving around, the security guy around the mall. There's nobody there around the mall, so empty. So this is what happened. JWN tanked from $43 all the way to $12. So imagine how much the big boys will make money. They have the power to buy all these stocks that they tank from 42 all the way to 1250. So they bought it. So somebody bought, at 1250. Then some news came and it gapped up. Maybe there was a news. So um, one retailer has some positive news and it's affecting all the other retailers. So you start flipping the chart during the day. Okay, the news is good news is here. That stock has already moved. So let me see where else the effect is coming. So that's the logic. So I apply the logic, which is a caveman logic. So apply it's gap up. So what are the chances of JWN to go up, to go down if there is a positive news in other department store? So apply that logic at 1485 by the calls. Boom. You see that? Right there, gap, 137% gain. So this is all common sense trading, which I teach in my coaching program, and it doesn't look like, it looks like common sense. It is common sense, but there are a lot of things behind the scene. So 137% gain right there in 2 days. Not 2 days, like, yeah, same day. So what happened when we bought? So when we bought at 1485, the chart was looking like this. So it went up already that day, same day it went up. So we caught the move at the gap up. So I apply the gap up techniques. I apply the opening range technique. I'll explain later sometime. So gap up, opening range, all that. So breakout reversal. So caught this at 1485, and the same day it moved to around 17. So there was a gain already, and then waited for one more day, and then gapped up, close the trade because it's hitting this resistance. And who cares? We have 137% gain. Here is low trade. So low trade Home Depot. So maybe the Home Depot came up with the earning or something positive news. So and the Home Depot is moving, then we say, okay, what else? What need to look? So logically, immediately, if something is happening in Home Depot, you need to look at low. If something is happening in low, you're looking at the Home Depot. So always look at the other company. So there may be a news on Home Depot. So when I look at the low, so I say, okay, the low is doing this. So here's the support. It's not that bullish, but this candle was looking bullish because it gapped down a little bit and then it took out the previous day high. So we enter right there. Chances are that low will go up, then to go down, and maybe there is a news on Home Depot. Who knows? And look at this gap up. So you see that. So when it gapped up, 18% gain, we take it. Now here's the lift chart. So what happened on why the lift trade? So the lift trade is that the Uber announced 15% or 20% layoff. So that was the news on that day. So Uber was going down. So I said, okay, if Uber is going down, let me see the lift. So, common sense, again, same thing. So if Uber is going down, let me check lift. So I check lift and I say, okay, what are the chances of a lift to go up when there is a bad news on Uber, and Uber is also going down? So I take my chances on this gap down. So on 1st of May, and look at that, what happened. As soon as the next day gap down. So two gap down back to back. we book our profit at 45% gain. Here's another Monster beverage. So look at this Monster beverage support. So this is all common sense trading. So look at this support right here, right? 58, 59 support. And this is a super bullish candle penetrating the 200-day moving average, 50-day moving average. So what are the chances of a Monster beverage to go down or to go up? So if somebody asks you what you will say, where you will put your dollar. So, if you flip it's like, okay, I'll take my chances on the go up. And we sold actually early. We sold this trade early. We made 25% gain. We sold early. It went up more. So maybe because of the market, when we sell early, it's because of the market conditions. So market is very treacherous. So we know that from February to all the way it's a high volatile market. So it's very treacherous. So we navigated all that treachery. And we have a market service, so you can sign up for market service also. So we sold Monster Beverage and made 25% gain, so that was good enough. Now here is NUGT. So we have index option service where we trade all the indexes, so like QQQ, DIA, SPY calls, and all that. So we make a lot of money in index options because anyone who is trading and making money in the stock, he must make money in the index option. If he's not making money in index option, then it means he doesn't know how to read the market. So if he knows how to read the market, then he should trade the indexes related to those markets. So I watch gold and gold miner. I don't buy gold directly, but I do trade related to gold miner. So I watch NUGT. So DIA, QQQ, and all that, despite the indices. So just now today we closed QQQ calls like $700-800 per contract. So if you want to join index option, you can join at the right time because we just sold and QQQ calls today and knocked our gains. So here's NUGT. So you see this where is again from 43. It looks like 43 is some price where most of the stocks are tanking. Do you see 42.50 is like all the stocks I showed you, not all, but if you go back to the recording, you see 42.50 is some magic happening at 42.50, and they are tanking from 42.50 all the way to like $5-6. So imagine the big boys they're buying here. They don't buy right here. All the retailers are buying here. So they come in. So what are the if you look at this chart, what are the chances of NUGT to go up than to go down when it's reversing? So when I spotted this move, taking out the 10 resistance, I went long right there at 11.28 and then sold next day. So that's all we are looking for, right? 27% gain. Who cares if it goes to the moon? Because I have other position, I can put this money somewhere else and NUGT can tank tomorrow. Here's another one, oil stocks. So all these days, recently, oil stocks, airline stock, cruise line stocks, department stores, these are the drug stocks. So all these, being traded, technology stocks. So OXY, oil, again, oil. So it formed the bottom at 12, looks like support at 12. If you look back on the left, and it's poking its nose again. It gapped up, it just moved a little bit, and then it was poking its nose at 12. So I said, okay, what are the chances? Again, what are the chances? So ask this question to yourself, what are the chances? So the chances are it's going up. And then when it moved up, gap up, sold for 32% gain. So imagine all these winners coming in your portfolio. If you're not in the trade, if you are, then you know what we are doing. So PayPal. So look at the PayPal. So again, PayPal, I don't know why the PayPal is, maybe the merchants are not processing their payment. That's why PayPal tanked from 125. Who knows why it tanked? It's just tanked because everything is tanking. Merchants are not processing. All the stores are closed and everything. So their revenue, they make money from commission. They make free money. It's like free money. They just take your money and they keep some. And then so I know how much they make money from me. So here, PayPal, so from 125, it tanked to 82. So here, when it pokes its nose above 50-day moving average, finding the support, 200-day moving average. So what are the chances? Again, here's the support again here at 102. Here's the 50-day moving average. It's taking out 200 days, doing the ping pong fashion. So the chances are that going up And then one next day it went up, 27% gain, lock the gains. Now, few more charts left. Qualcomm. So again, we trade Qualcomm. So this is in a 250 stock basket. So all the top quality stocks are in my basket. So when I see something new, like they talk in CNBC or somewhere, then I look at it and I say, okay, this is included or not excluded. So I include. Sometimes the stock gets excluded because it is no longer, it gets merged, buyout, or it just goes to like $2 or $3. So just remove it, add something new. So Qualcomm, I trade Qualcomm, we trade Qualcomm. So you see that like Qualcomm, so this is another pattern I'm just explaining to you. So when the stock tanks, it's like gap down, and then next day gap up. So if the stock gap down and then gap up, what are the chance why it's gapping up next day after gapping down? So 3 consecutive down move, and then it gapped up and fill the gap right there. So what are the chances of Qualcomm to go down or go up when it already made the low at 72? So you see what happened? 21%, 21, 22% gain. So we sold around $80, $79. So we bought at 74, 75, and we sold at $79. So 21, 22% gain. Now it's QQQ. So I was telling you about QQQ. So we trade QQQ, DIA, and SPY. So it depends which indices. So we select the indices where we see the opportunity. So we trade QQQ. So QQQ was bouncing. So it was 9th of April. So you see 9th of April. So the market bottom on 23rd of March. So this candle, this candle is 23rd of March. So from 23rd March, the market is just rising upward in a V shape. So market is moving in a V shape. If you look at the chart, you will see V shape. So, so when the QQQ held the 200-day moving average around 200, and our target was 225, so it hit today. It went to 227. So imagine for the profit. So 200, bought the calls. We sold next day, then we bought again. So we repeat. So we in the QQQ or DIA, we navigate through the market like you are like you're going through some zigzag lane. So this here, there, exit, then get in. So we exited right at the gap up and made what 41% gain. Roku, we trade Roku. Roku is wild. So Roku make us money, and then it also give us a heartache because it moves up and down crazy. So Roku is not for everybody. It's a high price option. We send it to swing option. So Roku, what are the chances for Roku here when it's holding this 90 level and poking its nose at 92? Boom, gap up, sold, 34% gain. So the reason we have 34% gain, maybe we bought the out of the money option. So when we buy out of the money option, um, uh, because it's expensive, so the at the money or in the money, they are very expensive. So when we expecting the move, we put less money, but and then we make less. So, but it's good. 34% is good enough. So when it gapped up, 34% gain. Here's the square. So again, when PayPal is moving up or down, I'm looking at SQ to see, okay, what SQ is doing. So they move together. So what are the chances of SQ to go down and go up after 3 days or 4 days of tanking here, and then bouncing back, and then counterattack, then gapping up. So all this when you put together, 2 plus 2 equal 5, it go buy calls, and then look at what happened. Okay, yeah, so it did go up. We made 92% gain, but look at this one. And so we bought it, let me see, where did we buy? So we bought on 8th of April, around 9:55, 9:56. So we date and time stamp our trade. So, but the chart is saying 9:56, maybe we bought at 9:40 or whatever time, but we bought on 8th of April. So here's the chart at 53.85. Here's SQ at 53.85. And then it tanked to 45 or something. But look at this one. So sometimes so our trade is not like all the trades are just going to the moon straight up. They come down also. So the SQ is one of the such trade. It moved up. So we bought here and it moved up. You see that? So somehow I missed this exit. So maybe I became greedy and I did not take the trade. So here's the example of greediness. that we bought here and it just missed it. So when we missed it, so this is what happened. 4 days of down move, but it held the support around 40, 43, 44, the support. And then when it starts to move up, I must have send another alert to buy more. And this was enough. This, what is the price? 61.62. So we exited at 91.67% gain. Here's another one, X. So steel stocks, look at the steel stock, they're just going nowhere. So United Steel from 14.15 to like $3, $4. So this day, there may be a news that why X. So I sent out alert to buy at 780, 85, and the target was, first the target was 880, so $1 move. So percentage wise is a big move. Then I raised the price to 980, so around here. So I said, okay, maybe this X will go here, right here, at 10 level. So I raised the target to 10, and then we held on to it, and then finally we sold around $9. So we sold here, and we made 39% gain. So we sold right here. So we did not wait for 10 price to reach, because tiny candle form. So after a big move, if the tiny candle form, then we take the profit. 39% gain is good enough. And the lastly, I think this is the last, we reached the X. So Exxon, again, is the same thing. Oil stocks moving. Which one has moved, which one is moving, which one has not moved yet, which one is getting ready to move. So Exxon, so again, these tiny candles support at 42, bounce above 50-day moving average. So what are the chances? And even if XOM tank to 40 level, this support here at 40 level, 39 level. So I'll buy more at this level. So I entered it on 44.90 and gap up, sold for 25% gain. So 25% gain is good enough. And then YY. So YY we bought put. So YY is also in my 250 basket. So this is what the YY was doing. It broke the congestion zone here from the level where it rallied. So the stock, when the stock rallies from some price and then it comes down and take out that low, so what are the chances that it will go back up, then to come down? And if all we need is 1 day. So the volume was good and it took out the low. So we entered right here when the low broke in put trade. And next day we logged the gains because we saw this candle. So we said, okay, we need to exit. It's not coming down right here because YY has bottom at 42. So there was some negative news. It was tanking and it gave us 23, 24% gain. We took it next day. So I showed you many charts. This how my thought process is. There's more to it behind. It's just not all this. So if you're not in the trade, in a swing option service, you can sign up for $17 for 1 week trial, and then you like it after 1 week, then it gets renewed at 167. Or you can directly go to the website and purchase our option, swing option service for 167. You don't $17. If you're waiting for $17 offer to come, that tells me a lot about your judgment as a trader. That you care about $17. Maybe I don't send the offer for like 10 days. So who cares about 17, right? You join at 167. But if you really care about 17, then please wait for our trial offer. And when it comes, then you can take the trade, sign up, and it automatically gets renewed at 167 after 5 trading days. So we select the stocks from 500 stocks. So I have a basket of, it's actually 460 now. So I cut down to 40. So 250 baskets and 200 another one. And 8 to 10 trades are sent. So if you have a bigger size portfolio, like 25,000 or more, it's perfect for you because then you can take all the trades and don't cherry pick. And if you have a smaller portfolio and you are busy or beginner, then you can join our swing light, which is at 107 on the website. And the objective is 40 to 100% gain. I showed you. So on average, we make 50% gain. So 50% gain is on average, and we lose 52% gain. Our loss is from 50 to 65%, but on average, it's 52% loss. And you need to act upon it within a reasonable time. If you miss the trade, you can always send me email saying, I missed the trade. Is it still a good buy? You can compare the buy price with the current price, and you can make the decision. If you cannot make the decision, you can send me email, and you probably will get at the discount price. So if I send the alert to a buy at 5, maybe it's trading at 450, and you can buy. And we provide the advanced sell target. So I provide the target in advance. So you can set the conditional order, like I explained to you, the conditional order, you can send it. And I also send the alert like 99.999%. So not 100%, 99.99%. I send the alert when the stock is hitting the target to take the profit. So we are very passionate in what we do. That's all we do, and we care about you. So sign up today, and there are other services on the website. So just go on the website and see what you like. Now, hi Ayush. So you are at it again. What parameters do you select to screen stock? I have made a lot of money because of you. Thank you. There are a lot of parameters. It's not easy to just tell you in just one, in this coaching what parameters. So I explained to you, showed you many charts. So I hope you got something. And if you're interested in learning, you can join the 10-month coaching program. Another one, which service do you recommend for 5K account? So 5K account is 5K is very little. Maybe for index options, you can sign up for index option. I think it's $77. So there's only 1 or 2 trades you can take, build the account, and then you can migrate to the swing light service. So swing light service is again next level. And then if you feel comfortable after swing light, then you can join the swing option service. And then you can add other services. So people, like I have members who have multiple services, bundles of services. So they take all. They tell me, combo, throw at me everything, and I will take it. So what else? Okay. Okay, so if you what is the time frame of the options you buy? So yes, so usually I buy 50 days and between 50 days to 75. So now I've started buying July calls or August calls. So if the option is not available for July, then I buy for August, and if not available August, it's September. So I buy September. Although don't need to buy, I don't buy the time that. And this is one thing. People waste money in buying the time, but people also are greedy and they buy less time, like trade weekly options or 2-day, and they say, I bought this for fun, or I bought this as a flyer. So I don't buy option for fun or as a flyer. So I only, so trading is a business, not a hobby. So I don't consider it as a flyer. Sometime when the earning is coming, when I see 40, 50 cents, maybe, and I see a big jump is coming, then maybe I buy one contract, not like 10, 20, 100, because it's trading at 20 cents. So in other words, I look at the 50 days. Now, let's say we have a 50-day, let's say we have options for June, and there are 45, 50 days left. So if I'm initiating another position, I won't buy June, because what if the market tanked and all the June options tanking, and I don't have the time to recover? So I start migrating myself to July and then to August, and start wrapping up the June call. So I will start wrapping up June trade. So this last 2-3 weeks ago, we had 3 positions open in May option, like Murphy Oil and others. So although so we had Murphy Oil option for 50 cents, we bought for 50 cents, and it tanked to 20. There was no stop there. For 50 cent option, you don't put a stop, because the stop goes down little and then the option goes to 10 cents. So when you're buying 50 cent option, you're assuming that all in kind of scenario. So it went to 20 cents, and then it started rising. Murphy Rise started rising, and we were running out of time. So I sent the alert to sell at like 50, 55 cents. We exited, and then next day it went to 80 cents. So sometimes the break-even winner, the break-even trades are considered as a winner trade. So save your money, and don't try to make money in every trade. Just exit and put your money somewhere else. So when the June we see the option, the option expiry date is coming, we start closing those June trade, and I'm focusing on July and August. So if July and August is not available and the stock looks so good, then pay extra money for September. So if your timing is right, so in trading, the timing, right? So in options, the timing. So if your timing is right, you don't need to buy 90-day options or 120-day. If you're right, you're right. You will know within 5 days that you're right or you're wrong. So don't need to buy. Yeah, you just buy proper option based on the you can take a look at the spread, volatility, etc. Sometimes the volatility high and you still make money because it goes more crazy after you buy. It goes more crazy like it did in February and March. So any more? I have few more slides. What is the name of the website for means of calculating option price movement with the stock price? So, yeah, well, a long time ago, when I started learning from Option Express. So I opened an account in Option Express. So Option Express I don't know now, but Option Express used to charge like $15 per contract. So you buy $15, you sell $15. So they had this feature where I put the target price and I select the strike I'm buying, and then I push the button and it calculates the future price. So I was doing that. So they have the formula. So in a Black-Scholes formula, you have the dividend rate, interest rate, and volatility, and underlying stock price, and days to expiry, and all these things. So based on that, they have they have the formula. So they told me that this is the target. So then I take the target option price and put the sell order. But then it doesn't work. And sometimes it works, sometimes it doesn't work, and I leave the money. That's where I said, okay, I need to put conditional order. So when I moved to interactive brokers, I asked them. So option extra, maybe there are other websites you can look at to calculate the future price. And this webinar is getting recorded, so tomorrow you will receive the recording. So if you want to listen to me again, you can listen. Okay, so next slide. So this is something new service I have started in a project with someone else. So we are working together. So he will help you out if you're interested in asset protection or ID protection. Just send us email that you are interested in protection, and we will enroll you in another webinar, and then you can come to that webinar and see if it's something you are interested in protecting yourself. So just send us email and we will register you. So now, the last part, if the traders who make money, those traders who make money, they don't need degrees. They are street smart. So you need to, in trading, you need to apply some common sense. There's more, there's more than just reading the news or listening to TV or reading chart. There's more to it. So beyond reading the chart, you need to have some common sense. We don't need degree. So the traders I see every day, my members who make a lot of money, they are really smart. They are smart in their life and what they are doing, and they are really smart also in trading. So be a street smart trader. All right. So sign up for $17 trial if you cannot wait, then just don't worry about $17. Just sign up for 167 or 107 or 77. Just sign up. All right. So thank you. So we covered today two topics: conditional order and technical analysis. So next week I'll try to hold another webinar on another topic. All right. So thank you for coming, and I think there's no more question, and I will stop the recording. Thank you. See you. Bye.